Welcome to the Decent Crypto Podcast. Today is Saturday, July 30th. We are live from New York City and Paris. I'm here with Matthew Blumberg with another decent recap. Matt, how you doing today?
Bonjour. I am doing very well. ETH's above 1700. Decentralization is in the air. It's just a beautiful weekend, honestly. Like nothing to complain about, you know.
As you can see from Matt's face, all crypto prices are up. We had a nice little week, you know. It's been down only for like 6 months in a row, so it's nice to get a little glimmer of hope. I think the official GDP data marked that we have hit 2 straight quarters of what is it called? Just negative growth.
Negative GDP growth.
Yeah. Negative GDP growth, 2 quarters in a row, officially marking a recession. But then, unofficial, according to the White House, who says that this is not actually a recession. What is it? What is it according to them?
It's an economic downturn, bro.
It's an economic downturn. It's only a recession if it comes from the recession region of France. So thank you, Joe Biden. Yeah, you're right over there. Yeah. Let us know what it's like, Matt, because this is not a recession. Asset prices are pumping. Bitcoin 24K, ETH 1700. ETH BTC 0.07, the 3 most important charts in all of crypto. Matt, what's got you excited about the big pumps this week?
It's all about the merge, man. The merge trade is so real. We've gotten a little bit of news out of the merge camp recently. So the Goerli Testnet merge is scheduled for August 4th-ish. It's not like an exact date because you have to go by total difficulty. So just to like recap, like total difficulty is the cumulative sum of like all of the difficulty for all of the blocks in the chain.
So all of the hash power that's ever been contributed to secure the Ethereum network, they calculate all of that, add it up. When it hits a certain level, they will then execute the merge.
Yeah, and the reason you do this instead of a block number, it's like a little in the weeds, but basically like anybody could make a bunch of blocks that like are at like very low difficulty, like they wouldn't get like accepted by the network, and so like consensus wouldn't be reached on them. But in theory, like if you were a bad actor, like you could create a chain that like has a whole bunch of like super low difficulty blocks appended to like where the blockchain is today and hit like a block number, and somebody could like accidentally see that and be like, oh, okay, it's time for the merge.
So you could game the system in essence.
Yeah. Whereas like difficulty is like actual, like it's a physical concept, right? Like it's actual hash power being expended. So it's expensive to game, and like it really wouldn't even be like gaming, right? Because at that point you're just mining.
Yeah, because you're actually contributing those economic resources and you're basically just mining. Yeah.
Yeah. And so the rough date will be, I think, August 4th, 5th. And I think we should host a watch party.
We're going to have a Twitter Spaces for the Goerli Testnet merge, our very first decent Twitter Spaces ever. That's going to be great.
It's going to be you and me in a Twitter Space.
You, me, Nico, Vlad, and the dude who loves Joe. You're definitely listening, but dude, let us know what we should call you, because I don't know what your actual name is or what your fake name is. So we'll call you whatever you want, man.
Yeah.
So shout out to all 3 of you.
I mean, so this is like a pretty big moment, right? Because so far we've had 2 testnets undergo like practice merges or merges, right? And this is the last one before the main net undergoes the merge. So the first one we had Rupston, and that one went like relatively successfully. Like there were a couple of like parameters that one of the client development teams like needed to change and like didn't manage to. And once they updated that, they were like good. So then there was Sepolia, which is a testnet that was actually created like to be a merge testnet, right? It's like specifically created for the merge. And so we had that one successfully merge. I think it was like a few weeks ago. And so now we have Goerli. And Goerli, I believe, is going to be like, it's going to be the testnet that people use after the merge. So if you're like a developer and you want to like test your contracts, like that's the network you should be using.
Okay.
And then they're going to wind down like Kovan, for example, which historically has been like the testnet to use. Like, so OpenSea like uses it as their testnet. Kovan's going to get wound down. It's like fully deprecated already. And it'll probably like, they'll probably stop making blocks in like a year or so. And same with Sepolia, probably about a year. And then going forward, Goerli is going to be the one that you want to deploy on.
Okay.
And so after that, there's just a couple of steps before mainnet merge. So, each of them is, like a hard fork of the beacon chain. And so the first one basically tells beacon chain participants to start listening to the proof of work chain. And then so that like they're ready to like start making blocks, when total terminal difficulty gets reached. And then the second hard fork is, it sets the actual total terminal difficulty. So like today it's set to some absurd number, like 100, 150 years in the future. But they'll decrease that, as we get closer to the merge date. And then we'll have like a much, like a fairly accurate knowledge of when it's going to happen. So on testnets, it's a little bit trickier because hash power is like very fleeting, and like notoriously like, volatile. Because like there's no reason to like hash more or less there, right? So it's just like randomly people just hash and then not. On the actual like Ethereum blockchain, right? Like it just depends on how much hash power is in the network, and like that tells you like you can compute like per block like roughly how much difficulty is going to be expended.
Okay, so Goerli is set to happen in like 5 days. Is there anything super different or notable about this one versus, you know, the other testnet merges?
I wouldn't say so. No, it's, you know, but more
Just kind of
eyes,
standard operating procedure.
yeah, more eyes are going to be on this one for sure, because it is like the last testnet to undergo the merge prior to the actual mainnet of Ethereum.
Okay.
So
Yeah,
join
I
us
mean,
for our Twitter Spaces.
Yes, for our Twitter Spaces, August 4th. We'll set the date, you know, once it gets closer, but we will be live. Okay, great. Matt, let's move on to America's favorite segment, the FOMO of the week. Matt, I'm gonna hit you first. There's a lot of FOMO this week, man. All related to the merge, actually. So
the
you
merge
want to kick us
trade
off
is
here?
on.
The merge trade is on.
Yeah, I'd love to kick us off with, I mean, this one's really a FOMO, because who was going to buy this? Ethereum Classic.
ETH Classic, baby.
ETH Classic, aka the real Ethereum, is up like 60% this week. So I was like just checking the prices at like $40, versus like the last number that I had in my head, which was already absurdly high, was like 25. And that's like this week alone. So I don't know, like, should we do like a quick little recap of like ETH Classic and why it's the real Ethereum?
All right, here is 60 seconds on Ethereum Classic. So in 2017, about a year into the history of Ethereum, there was a new contract called the DAO. The DAO garnered a lot of attention, eventually getting like 30 to 40% of all the ETH in circulation into the contract. The DAO had an exploit where a hacker was able to go in and steal all of these funds. The community decided to go two separate ways. There was a big faction led by Vitalik that said, we're going to change the rules of the protocol to basically roll back this exploit, not have this hack happen, and move forward with the chain from a point before that actually occurred. Another group of people, a very small group of people, said, that's not fair. We need to keep the actual history of the chain intact and go forward that way. That's the whole point of this decentralized movement. We need to keep things the way they are. Let's ride with that. Now, the original chain, that second group, the small group, that is Ethereum Classic. That is the original Ethereum chain. No changes, no rollbacks, nothing like that. And the ETH network, the Ethereum network that we know today, the ETH token, the one that represents that network, is the fork, the chain split that rolled back that exploit and is the Ethereum that we know and love today, right? So ETH Classic, the one that's pumping hard this week, why is it pumping so much?
So it's all related to the merge, right? So when Ethereum, as we know it today, so since ETH Classic is called ETH Classic, let's call this ETH 1.0. So ETH 1.0 is going to undergo the merge to proof of stake and become effectively ETH 2.0, which is like a loaded term, but like let's just use it. There's a lot of there's like a whole cottage industry, right, of people that are mining Ethereum today that have a lot of GPUs. They have like long-term electrical contracts. They might have leverage, right? They may have like borrowed money to buy extra GPUs because it was like such a profitable endeavor for so long.
And is it like that similar to Bitcoin mining where you do need to be like taking out all this capital investment, right? Like I always assume that, you know, it's not really that computationally intensive where you need to be, you know, optimizing specifically for electricity costs, and you need to be, you know, reducing your expenses all around as much as possible. Is it really that same model as Bitcoin mining, or is it more akin to, you know, like a hobbyist kind of approach where anybody can have GPUs in their own closet or what have you, and still be able to profitably, you know, mine?
Yeah, it's a great question. So back in the day, Ethereum, like the Ethereum community collectively decided that they wanted to make Ethereum as like decentralized as possible. And so one centralization vector for Bitcoin has always been the fact that like, the Bitcoin hash algo, SHA-256, right? You can build specialized hardware that's very efficient at executing that. And so, you know, 2 or 3 large companies sort of like became the dominant players in the manufacturing of these application specific integrated circuits, these ASICs.
Notably Bitmain.
Yeah, Bitmain, Bitfury, if they're still around. And so as a result, like the ability to profitably mine Bitcoin is somewhat like, it's much more narrow, right? It's only available to people that can get these chips. It's changed a little bit, you know, the last few years, but there was a point where like being able to access the latest generation of miners versus not made a world of difference. It made or broke like whether or not you were able to profitably mine Bitcoin.
Yeah, that and having close to zero electricity costs. It was like a race to the bottom for, you know, having electricity costs as low as possible.
Yeah, and so that carries across to Ethereum though, right? Because even though, so Ethereum uses a different, like hash algo, that's like much more GPU intensive, or like much more memory intensive, and it lends itself quite well to using a GPU to mine. And that's sort of like the best you can get in terms of like specialized hardware for mining. And so at that point, it's, you know, it's a much larger market, right? Like there are a lot of manufacturers of GPUs, like NVIDIA tends to be like the largest like designer, and then they contract out to manufacturers. But, effectively, like everybody sort of has access to very similar quality, like hardware. Then it becomes about electricity price, right? So to a degree, it's even more about electricity price because the like access exclusivity is lower. It's a lower barrier to entry in Ethereum than it is in Bitcoin. If that makes sense.
Yeah. But in general, like GPUs are not known to be super, you know, electricity intensive, right? Like that's not quite the issue here.
So they are and they aren't, right? Like, you know, if you're mining Ethereum, like you have 2 costs. You have the same 2 input costs as you have for mining Bitcoin. You have hardware and then you have electricity. And so if you're trying to like scale up and like run like a profitable mining operation, like you're just going to scale it up, at which point your variable cost is the electricity.
Okay. Let's tie this all back to Ethereum Classic.
Yeah. So there's a lot of people out there, myself included, that think that proof of work has a role in this world after Ethereum goes to proof of stake, right? Like there's philosophical reasons, for example, like anybody can plug in a miner, right? But in order to participate in proof of stake, you need to actually have access to that digital asset to begin with. And so to make new blocks on proof of stake, you need to already have ETH. To make new blocks on Bitcoin, all you need is electricity and some hardware. Which like, like the level of success you have economically will change, right? Depending on your circumstances. But like you can make a case that this is much more egalitarian, this proof of work approach. In practice, it's not, right? Because access to hardware and electrical, contracts, but there's a reasonable case to be made that there's a role in this world for proof of work. And once Ethereum merges, obviously like your primary option for proof of work is still Bitcoin. But if you want any kind of like proof of work driven smart contract platform, basically ETH Classic is your choice today. Right. And moreover, like it uses the Ethereum virtual machine. So you can use Solidity code. You can deploy contracts relatively easily on Ethereum Classic, without like really changing much from the same contract on Ethereum. Right. And so the primary question is something around, is ETH Classic going to become the de facto proof of work smart contract platform? Or like, will we see another one coming out of the merge? And for more information on that, like definitely check out like our merge deep dive.
Yeah. Okay. So just to clarify, there's no other smart contract platform that is a proof of work chain that exists right now, right? Everything else is proof of stake, Solana, Polkadot, Cosmos, everything based on Tendermint. Every other chain.
Yeah.
Okay.
I mean, I'm sure there's some small one, right? But the issue there is that anything that's that small can get 51% attacked.
Yeah. Even ETH Classic, they were saying that you could 51% attack it last year for like minimal amount of money.
Yeah.
So it'll be interesting to see if all that hash power, or at least a lot of that hash power, does actually end up going to ETH Classic. And if people start actually transacting on it, like what would lead to a price rally in ETH Classic, similar to what happened last week, right? So it went from $26 to $40, 60% up, whatever it is. Well, so is it just the fact that there could be hash power going to the network? Would that actually lead to an increase in the price because there's more miner activity on it? Or would it have to require, people actually purchasing it would have to require people actually purchasing those tokens on the open market at a higher price, right?
Yeah.
It doesn't just have to do with the miners.
Yeah, I mean, the miners are going to follow wherever the price goes, right? But, it's a bit of a virtuous cycle. Once you have more miners contributing hash power to the network becomes safer. Then you feel like safer about deploying apps or smart contracts to this network, right? And then once you have more apps and smart contracts, like you have more people that are going to participate in the ecosystem, and then that raises the price because they have to buy in. And then that price in turn motivates miners to contribute more hash power, right? So there's a lot of ecosystem players that are have announced plans to spend some money incentivizing developers to build on ETH Classic. And so, today it feels like if you go on ETH Classic today, there's almost nothing usable in terms of applications, right? Like there's a huge opportunity to create Maker and Aave and, Curve, I guess, if there are any stablecoins, and Uniswap, right? On ETH Classic. And so it'll be really interesting to see if the ecosystem gets built out quickly or not, right?
So you're saying DeFi summer, let's run it back.
Run it back. This is what we need to save our DeFi summer bags.
Yo, I'm so in.
DeFi summer Classic.
It'll build all the same Ponzi's on ETH Classic.
Oh man, dude, Olympus on ETH Classic. People would love that.
Let's go. Let's go. All right, beautiful. I like that FOMO of the week. 60% up, ETH Classic, merge play. My FOMO of the week, also a merge play, Lido. I actually can't remember if we hit Lido at previous FOMO of the week, just because
I think this was my last
Lido's
FOMO
just
of the week.
Yeah, it just keeps ripping, dude. It's up 60% again this week. Lido has been like one of my favorite coins for like the last 3 years.
No way.
Oh yeah, dude, you have to ask Anurag about this. We have made and lost so much money on Lido. Oh dude, I was so euphoric last May when it went to like $7 or whatever. That was insane. But yeah, Lido is a staking service. We did a deep dive on, what did we do a deep dive on? Did we do it on Lido or just like staking or staked ETH or something like that? We'll link it.
Yeah, we'll link it.
We'll link it down here. But Lido is basically a liquid staking service for any proof of stake chain, but their core product is staked ETH, ST-ETH. It basically is like a liquid token that tracks ETH that's been put onto the Beacon chain, or to the ETH 2.0 chain, as we've been referring to it here on this podcast. So yeah, people are FOMOing into the Lido DAO token, LDO, as another token to play the merge. In terms of actual value and use with this token in general, I think that it's a less clear play. It's a less clear merge play. Because yes, Lido is super valuable, and they have 32% or so of all of the ETH that's been staked so far onto the new chain. But I don't really see how the token accrues value with the merge happening, right? Is it just that more people stake, but does that really lead to more value accrual for token holders? Like, I definitely see it as a speculative investment, and I see it as, you know, it's in the end, it's a governance token, right? It's got no other value outside of being a governance token, if I'm correct. Is that right?
Yep.
Okay. So if that is the case, like, the only real play here is speculative. Yeah, I guess. Now I'm trying to reason out a bull case going forward, where it's like,
so Lido accrues fees, right? Based on, so you know, you pay them a bit of a fee to like stake your ETH for you, and so the DAO has like a treasury, right? And I guess the idea is, you know, currently all of the tokens that they've issued, all of the staked ETH, has all just been sort of like illiquid, you know, staked ETH, right? But as the merge gets closer, their business model becomes much more viable. And like people like me, you know, that would stake, right? I would prefer to stake through Lido versus like a centralized exchange. Just because exchanges participate in so many other businesses, and like, you never know when you're going to have like some kind of ecosystem contagion. And so I'd feel more comfortable staking on Lido than say through like Kraken, right? And then I have tokens, and I can use those tokens for all of the same shenanigans that I always use them for. So to me, like, obviously like staked ETH, relative to ETH is like the purest play on the merge, but Lido itself becomes much more real once the merge happens. And especially once like withdrawals are enabled.
Yeah, but I still don't see where the token accrues value. Like the LDO token itself.
I mean, it's, you know, it's in the same place that every valueless governance token accrues value. Like they have a treasury, yeah, right? But like inherently valueless, right? But Lido is a massive player, right? Like I think it's some enormously outsized percent of the total value staked, right? Is through Lido, because they've just built a really killer product.
It's like 30 to 32%, something like that.
That's enormous, right? And if you think about the way that like mining pools became a thing, like staking pools also a thing, right? And that's what this is.
That's so basically Lido. It's
participate in the governance of the staking pool. Yeah. And so
yeah, but why do you care about that, right?
I mean, you don't, right? But like, I mean, if you look at like, why did it pump this week in particular? Like, why did it continue pumping? You can point to a few things, right? You can point to the merge, but you can also point to, they had a proposal to sell like, I think 1 or 2% of the Lido DAO's like underlying, like holdings of their own governance token to Dragonfly Capital. And like, I have like a lot of admiration for Dragonfly. I think they tend to think about the space, in a very, clear manner, like clear-headed. But I mean, that shouldn't pump. The proposal to sell some tokens that aren't getting sold to someone that might sell them shouldn't be bullish, right?
Well, it was a little bit, like, to go into it, it was a little bit of a shady, not shady, but like, you know, controversial proposal, because the idea of this proposal was basically to sell them these tokens, like fully liquid. Normally, when you sell these tokens to a VC, they vest over time, right? And the proposal here would have given them full liquidity immediately to sell those tokens, and those tokens would be fully liquid, and they were sold to them at a lower price than the market price and the current market price, right? Yeah, and so that would have actually caused sell pressure. And so in that sense, okay, it's a little bit bullish, right? Because it's like, okay, that sell pressure is now gone. So I guess now we found the reason.
But look, like for the size that Lido plays in the overall ecosystem, it's still at a market cap of like 1 point like something billion, right?
It's like, it's a tiny market cap. The token itself is at a tiny market cap relative to its position in the overall market. I definitely agree with that. I think like the total market cap is 1.26 billion, less than the current lottery in the US.
What if the lottery winner just bought all the tokens?
Dude, that's an idea. Well, the lottery winner will have like $20 million. Yeah, okay. Let's see.
I mean, look,
on.
I think Lido still has room to run. I said this last time. I'm continuing to say it. I'm not as certain about ETH Classic, but I do. And like, look, I didn't buy any last time, and I'm not going to buy any this time, but I do think it has room to run.
All right. That's our favorite segment and America's favorite segment, the FOMO of the week. All right, Matt, let's move on. A couple more things worth hitting. A couple more liquidations than up only, as they say. ARK is capitulating. What exactly are they capitulating, Matt?
Coinbase. Wait, you didn't catch the story?
Of course I did. Sad. Come on, Kathy Wood.
I mean, speaking of outsized role in the world relative to market cap, Coinbase, right? And how does Coinbase accrue value? Unclear. How does Lido accrue value? Unclear. But, I mean, the thing about, you really shouldn't like say much, just, but, Kathy Wood, right, has been like a large proponent of everything, right? And like, I am like in my heart of hearts, a techno optimist, the way that like ARK tends to approach things. And it's sad to see the capitulation on something that like, I think they were calling for like an enormous expected ROI on Coinbase back when they like bought it.
So is this forced capitulation? Are they just not believers anymore? Like, what's the scene?
I think, similar to like the Three Arrows interview, I think, it's like, some things went against us here. I think it's basically where they're at. Look,
everything is regrettable.
I don't think ARK has done a great job. I will come out and say that like right up front. Like they have
hot take, man, after they're down 85% of the year.
Well, I think as of about a year ago, they were doing a very poor job. And, just like from an execution perspective, right? They should have done worse. They should have been bigger in actual innovative stuff. Like they have like a space ETF, and it's like 50% Google stock. It's like, what? They're like, well, Google, related to they try to make, it held Netflix, I think, at one point.
The space ETF?
There just aren't that many public companies that you can invest in the space. I want to say this ETF held shares in their 3D printing ETF. And they're like, yeah, space, 3D printing. At one point, their biggest positions were just the NASDAQ, basically. Overall, I don't know what's going on there, right? I'm not gonna pretend that I have a coherent explanation for why anyone at ARK does the things that they do, because I think even when things were when the world was in their corner and when things were going relatively well, they still weren't really going balls to the wall on the innovation that they hold as a core tenet of their investment approach.
Interesting.
Yeah.
Okay, so you think it was always a little bit too overvalued and they were never really gonna live up to all the things that they were talking about?
Yeah, I mean, I just think their execution has they may be right on every thesis, but their execution has historically been quite poor. It kind of looks like they sold the bottom. I mean, I'm not sure about Coinbase in particular, but this is who is left to capitulate, right?
Dude, I think we're finding out. I think with ARK itself, I think they actually have not sold all of their stock. They still have more. So if they're still capitulating, the bottom is not in.
It always has been.
Yeah, I know, right? Well, with ARK specifically, also they own a ton of GBTC. Oof. They own a ton of crypto assets overall.
See, this is exactly what I'm saying, right? GBTC is not exposure to Bitcoin. GBTC is not exposure to crypto or innovation or Web3 or decentralized anything. GBTC is an explicit bet on the price of GBTC, which doesn't have to track the price of Bitcoin for any reason. My 2 cents is that's a perfect example of poor execution, right? You shouldn't be mixing up your thesis here. Don't fuck up your narratives. If you're bullish on Bitcoin and you can't hold any, then don't buy GBTC, right? Just I think Coinbase was a very sensible investment for them to make, for example. Or buy mining companies. There are mining companies that just hold Bitcoin on the balance sheet, right? Buy MicroStrategy. GBTC is come on, right? That's just lazy investment work, right? It's I can understand how you would pitch it. It would be well, look, it's trading a little bit cheaper than Bitcoin. What a great opportunity to get in. People printed money on the GBTC trade forever, right? But
they've been holding for a long time, and I think they hold GBTC because they put in Bitcoin itself, and they have some kind of redemption mechanism. We probably don't want to get too into their actual holdings, right? But in general, I think I don't know, it's just another one of these groups that either is a forced seller or is a non-believer, and we're seeing that they're forced out. They're out, right?
Yeah.
Similar to Tesla last week. We're just seeing more of these groups exiting, which is a positive sign overall. I said this about Tesla too. It's it's a positive sign to see that, well, at least for anybody who's a Coinbase stock enjoyer, it's look, the forced selling is happening right now. You probably want to, not financial advice, but any kind of crypto assets right now, the more forced selling you see, the more you can say that a lot of that selling is leaving the market. So
it just takes risk off, right? It de-risks the near future, right?
Anyways, my overall thoughts are, I generally don't care about ARK that much. So let's move on to some interesting tech stuff. Synapse protocol. My favorite meme in all crypto is, we should have known the top was coming when they started selling us bridges. Synapse, being the biggest bridge of them all, has been a very useful protocol for me and for everybody else, really, for a long time. If you wanted to get your assets, to any different chain, you probably were using either the native bridge, if it was Avalanche or something like that, or Synapse. probably Synapse. It's just a really great experience.
Even between the Avalanche C chain and their like subnets, you were using Synapse, right? Like that was how you did it, right?
Yeah. If you wanted to get a DFK chain, I think they actually routed you to Synapse.
Yeah, that was the official, inverse link. Yeah.
Yeah. So, Synapse has announced that they are going to be rolling out their own chain. Do you want to explain a little bit about how this is going to work, Matt?
So Synapse operates and like interoperates with like a slew of blockchains, right? Like they just roll shit out, right? Like they continuously roll out new bridges, new routes, like etc.
They support like at least like 10 to 12 different chains and layer 2s.
Yeah. Like they're a trusted bridge, right? Like, so there's security concerns there, but they're sort of uniquely in a position to offer a smart contract platform that allows you to execute stuff across a bunch of different chains. So Synapse is rolling out their own blockchain, Synapse Chain. It's like EVM compatible. It's going to look quite a bit like an ETH layer 2, like an optimistic rollup. And their goal here is for app developers to deploy directly to Synapse Chain instead of deploying like SushiXSwap on, Ethereum and Avalanche and Binance Smart Chain and Polygon. You'll deploy it to Synapse Chain and it will execute whatever logic there, and it will sort of be a home for assets that people want to have people want to be able to use across different blockchains is the idea.
Interesting.
Yeah. I think this is like a really smart move. I think this is a really smart move because Synapse itself, like the token's like done quite poorly. It sort of trades along with DeFi names. And they have an enormous like first mover advantage here, right? Like name another bridge protocol.
No, I don't know.
So,
there's one, but I don't know.
I mean, Hop protocol, right? And like Across and all sorts of other shit, right? But like, Synapse is what you use, right? Synapse has the same, like dominance of the cross chain space as Uniswap has. Now it is trusted, right? But I'm optimistic that like by further exposing, like they've always actually used an underlying blockchain among their like validators to track like the token transfers across the bridge.
You think they have?
Yeah, I want to say that's their approach, right? It just happens that like anyone can sign those blocks and like, there's an Oracle problem, right? So someone can propose that like Matt gets 100 ETH on ETH because he deposited 100 ETH on Avalanche, and just sign that transaction without actually posting any proof, right? And so, so it's a blockchain of sorts, right? But I'm optimistic that like in increasing the level of transparency here will be very, very good for people who want to build apps that interact across blockchains. And they've said that ETH is going to be the gas token. So still unclear, like really what the Synapse token is going to be used for. But I think it's bullish.
All right, Synapse Protocol moving to its own chain. Another one of these kind of, I don't know, another one of these moves towards this app-specific chain future, right? DYDX announced this recently. Synapse just announced this. You think this is going to continue?
So I think DYDX was a bit of an isolated case because on DYDX itself, you only need one asset. You only need USDC, right? Because everything is just like a perpetual, right? Like everything is denominated in USDC. The only asset that ever gets touched is USDC proper. So for them to roll out their own blockchain, all they need is that integration with Circle. For them to, for Synapse, it's much more powerful, right? And it's a much more interesting case because effectively, you already have a ton of users that are trusting them with a ton of assets. Why not make your own bot? Like, they've solved this, like, how do I bridge assets in question because they're literally a bridge protocol, right? Whereas like if you wanted to have like an Aave chain, right, you would need to solve that bridging problem. I personally would be less comfortable using an Aave bridge than like, for example, just like going through Circle to deposit USDC onto YDX. I'm not saying I'm comfortable with Synapse, but a lot of people are.
Okay, interesting. Yeah, that makes sense. I guess starting with that core tenet of, you're already bridging all these assets. So would the idea be, you have these assets on that chain, right? Whatever assets you have on that chain can then be bridged to any other chain that it supports?
Yeah, or like, like pending liquidity, right? But they also have their like Synapse versions of each asset,
Right,
like the
right.
synthetic ones. And so like worst case, they'll do that too.
Very interesting. Huh.
Yeah, I wouldn't be surprised if TVL for Synapse grows spectacularly, right? As this becomes like, you could see a world where Synapse Chain is like the primary place you go to execute Uniswap, right? Or or whatever, right? Just because like they have that underlying trust, like people are trusting them effectively as custodians, like all the time, and so. Obviously, like, it would be really bad if, like, there was a hack or something. But to be able to, like, access all of those assets, right, it just, like, solves your, like, liquidity dilemma that you have on chains like Phantom, right?
Right. That's true. Huh. Okay. Very interesting. I'm curious to see how that plays out. Like, there's a lot of cross-chain stuff happening right now.
Yeah.
Yeah, okay. Speaking of which, actually, let's hit on this SushiXSwap thing. So SushiXSwap is using or working with Layer 0 to execute on their kind of cross-chain vision. Can you say a little bit more about this?
Yeah. So Layer 0, we covered them like very deeply in one of our deep dives alongside Stargate. We should post that in the show notes. But effectively, Layer 0 is like a cross-chain messaging protocol. And the idea is you can use Layer 0 to verify that a transaction has happened on one chain and publish that information to another chain, right? So say I want to send some ETH from Ethereum to Avalanche. I would send my ETH to whatever contract, and then I just have to call, hey, Layer 0, publish this, right? As like an app developer, it's pretty easy to integrate with. And then on the receiving end, I have to then say, hey, Layer 0, have you received a message about me sending ETH to, locking up ETH in whatever contract? So it's naturally like most useful for like bridging, right? So we saw Stargate as like the first big project to really fall out of this like cross-chain messaging. But as soon as you have bridges, everyone wants to swap too, is basically what happened. And so I think this was sort of in the air as like something that SushiXSwap was working on for a while. And they've just sort of like come out like a little bit more transparently and said like, yeah, we're doing SushiXSwap. That's the plan.
SushiXSwap. Okay. Is this, big deal, not a big deal, or a nothing burger?
Huge nothing burger, right?
Okay.
Yeah.
Nice.
Dude, cross-chain swap is just a terrible fucking plan. Okay. Yeah. Like, I always say like, if your plan relied on whatever, like maybe you need a better plan, right? I think cross-chain swaps, you need a better fucking plan. I think Synapse Chain is that better plan, right? And here's why. A swap is meant to be atomic. In fact, it has to be atomic because otherwise there's no way of really clearly, really clearly communicating what rate you're going to get on that swap.
And so just real quick, by atomic, you mean it has to happen within the exact same unit of like data transfer, basically, right? Like in this case, it has to happen all within one transaction. It can't be like you have one transaction that's swapping this thing, then one transaction that's bridging that asset over and then swapping it back on another chain. You can't have that. It's fundamentally one transaction for it to have the fundamental properties of, especially a trade. It has to be done in that one kind of unit of data transfer, or it needs to be atomic.
Exactly.
That's what you mean. Yeah. Okay.
Yep. And so here's why, right? Like say you want to swap some AVAX for USDC, but you want Ethereum USDC, right? Or maybe OCC is a poor example. Say you want to swap AVAX for ETH and you want ETH side ETH. The way that swap would work is like it would take 3 transactions, just like you said. You have the initial swap from AVAX to something, some intermediary currency. You have the bridging of the intermediary currency, and then you have the swap to like whatever destination asset. Maybe you don't have the initial swap, maybe you send it over and then swap. When you do that, you're signing a transaction, broadcasting your intent to execute this trade, right? This is already somewhat of a thing on Ethereum and like just Uniswap in general because of MEV, right? So as soon as you broadcast your intention to do something, if there's a way for someone to make a little money, by, using that information, they're going to do it, right? So you're like, when you say, I want to swap AVAX for ETH, everybody gets like what, there's latency, right? Is the issue. There's latency because you have 2 to 3 transactions before you actually wind up executing that swap. If you're trying to swap a large amount, that's just not, that's a really bad idea because people are going to trade against you, right? So if you want to buy ETH, they're going to like bid up the price of ETH on the destination chain, sell it to you at a high price, and then like sandwich attack you.
So you're going to lose money on both sides. And
there's going to be slippage on both sides. This is the primary issue that like liquidity is trying to solve is slippage, right? And like cross-chain liquidity doesn't have slippage, or it doesn't solve this in any way whatsoever, right? Like it sounds like, oh, there's more liquidity and one asset from one chain, another asset from another chain. And if like you use that mental model, you're going to be like severely misled. You're actually suffering from slippage like way harder. That's why we trade on the venue that has the most liquidity. This is just like a completely senseless like approach to me. I don't understand why anyone would find it worth the developer resources, the time, the fucking frustration. Literally picking up the laptop and opening it to start writing this code does not make sense to me. This is the dumbest fucking like most overhyped idea that I've seen in the space in my like short time here.
Tell us how you really feel, Matt.
Bullish.
Okay. Bullish. Okay. Talking about more bad ideas, our good friends at Harmony Protocol are proposing printing, how many? 1 billion Harmony tokens, Harmony 1 tokens.
So they're trying to print as much as they need to. Is it a billion, or is it like, are they targeting a dollar value?
I think it's a dollar value, but I think it's like somewhere near $1 billion right now. But basically they had a hack, right? They had a Harmony. What was it? Like the bridge, the Harmony bridge itself got hacked. Yeah, for $100 million. They are proposing to print and distribute Harmony 1 tokens.
That's their native token for the blockchain.
That's their native token to pay back these victims of this attack. Was this one of the North Korea group attacks? I don't remember.
I'm not sure. It happened relatively recently, but I didn't get too deeply into it.
I forget if it was the same group or a related group as the Ronin one, which was linked to the North Korean hacking group. But regardless, what do you think about this proposal?
Honestly, this is like entertaining enough that I'm, obviously it's a terrible idea, but I enjoy seeing stuff like this, like, so there's,
dude, how is this any different than the DAO hack? yeah, exactly. We started the episode with the merge and the DAO hack. How is it any different?
I can't see a difference here. No,
exactly. See, exactly.
Look, the other thing is, the one token, the Harmony token, is so has performed so poorly now for so long that like might as well just print some, right? Like anybody that was going to sell it probably already sold it, right? Like I don't think there's much of a marginal buyer for this token, and like if it tanks another 30%, like doesn't change it.
Yeah, dude, the last buyers were the people that wanted to get in on DeFi Kingdoms, but that's over now.
Yeah.
So yeah,
what do you think? What do you do? what do you do if your bridge gets hacked and you lose $100 million? Like, this is kind of your only lever. And like, I guess it's like better than not doing it, right?
Yeah, I guess. I don't know. Yeah, I don't know. What can you do here? Yeah, like, there's not much to do. I think this is probably the best of many bad solutions. But
yeah.
Again, for me, this is one of those, who cares?
It reminds me of the Luna 2.0, right? Where it was like, well, it's not zero,
Yeah, I guess so. Like, but it does set a pretty dangerous precedent, which is like anything bad happens, let's just airdrop more tokens, which I guess that is the precedent. That is literally the precedent. So
yeah, that's not only the precedent, that's the like MO of the market for the last 7 months.
Absolutely.
Right?
For the last 12 years. Yeah. So I guess this is a continuation of what we've come to expect, which is I guess that's says something about the state of the market, I guess, Yeah, okay. All right, one more last piece of bad news. Babel Finance? I don't even know how you say this thing. Babel. I think it's Babel. Babel Finance playing with customer funds. Degenning around with customer funds.
Babel
Imagine
Finance.
the smell.
Babel Finance, we have your best interest in mind, is their tagline.
Nice. Solid. So these guys are another, like, are these, like, lender borrowers?
Yeah, it sounds like they're centralized, like, borrow lend, yeah. Crypto
So
borrow lending, crypto management, crypto prime service.
So the core story here is that they were also using customer funds to generate yield. And I don't think it's clear yet what that yield was, but they have lost 8,000 Bitcoin and 56,000 Ether of customer funds, totaling around $280 million.
Oof.
The stories I read just said that they got liquidated when Bitcoin went below 20K. So yeah, another story of
the 20K club.
The 20K club. Yeah, I love that. The 20K club, man. Who's in the 20K club? 3 Arrows, obviously.
3 Arrows.
Babel Finance, Celsius,
Voyager.
Can we say BlockFi?
It's just 3 Arrows, right?
Yeah.
Well, I guess Voyager similarly also 3 Arrows.
Exactly.
Like, that's the thing. We're all part of the 20K club.
Yeah. Yes.
Raise your hand if you didn't get liquidated at 20K.
Dude, holy shit, this is the real super cycle. Suzu just ends up liquidating everybody at 20K.
Buy back in lower.
Yes, buy back in lower. Oh my god. Wow, bro. The hints were all there. The super cycle. Oh my god.
The 20K club, man.
The 20K
280
club.
million is like, obviously depends on the size of your balance sheet, but like you'd think they would have a risk team at some point, and any
Dude, are you
kind
kidding
of
me?
risk team. I guess not. I guess I am kidding. Yeah, I don't know.
Yeah. Welcome Babel Finance to the 20K club. Yeah, I don't know who else is going to join. Maybe ARK.
Actually, yeah.
Yeah, straight up. If you're part of the 20K club and you're still listening to this show, definitely let us know. We'd love to add you to this Hall of Fame.
We should do like some one-of-one NFTs. We should do like the 20K club NFTs.
Dude, I love
where
that.
It's like a Hall of Fame thing for like, or even like, we call it the 20K club for this one, but like you could also just imagine like a baseball Hall of Fame kind of thing where it's like you have the stats, right? Like alongside
Cooperstown.
there.
Yeah, absolutely. Oh yeah. Okay, we got some good ideas percolating here. This is probably a good spot to leave it. We'll be back in a couple of days with another deep dive. Till then, have a good weekend, everybody. And, of course, stay decent.
None of this was financial advice, legal advice, investment advice, or any other kind of advice. If you're looking for advice, you are definitely in the wrong place. Until next time, stay decent.